So, something really interesting is happening right now, and it's one of those stories that on the surface looks like it doesn't have anything to do with crypto. But when you actually dig into it, it connects to almost everything. Because right now, Japan is quietly sitting at the centre of a potential shift in the global financial system. And I know that sounds dramatic, but stay with me because by the end of this video, you're going to understand why people are suddenly talking about Japanese bond yields, why some are linking this to XRP, and why this could have a much bigger impact on crypto than most people realise. More importantly, you're going to see how all of this connects. Before we get into it, if you're new here, my name's Paula. And on this channel, we break down what's actually happening in crypto in a way that makes sense, without the noise, without the hype, and without trying to sell you dreams. Because the reality is, if you can understand how the bigger picture works, you don't just react to the market, you start to see things coming before they happen. Now, let's start with the part that most people are skipping over, which is the Japanese bond market, because recently we've started to see something change. Japanese government bonds are rising, and that might sound boring, but this is actually one of the most important signals in global finance. For decades, Japan has had extremely low interest rates. In fact, for a long time, rates were actually negative, which meant you could essentially borrow money in Japan for next to nothing. And when money is that cheap, it doesn't just sit there, it gets used. Not by individuals, but by institutions, hedge funds, and global investors. They borrow cheap yen and then they move that money into higher return assets like US stocks, US bonds, emerging markets, and yes, crypto. This is what's known as the carry trade, and for years it's been one of the biggest sources of liquidity in the entire global system. It's like this invisible pipeline of money flowing out of Japan and into risk assets around the world. But now that pipeline has started to change. Because as Japanese bond yields rise, that gap between Japan and the rest of the world starts to close. And when that gap closes, the incentive to borrow yen disappears. When that happens, money starts coming back, positions start unwinding, and liquidity starts tightening. This is where things start to get interesting because this isn't just about Japan. Japan is one of the largest holders of global assets with trillions invested across international markets. So if Japanese investors start reallocating, or if global investors stop using Japan as a funding source, that doesn't stay contained. It spreads across stocks, across bonds, and across crypto. Now, this is where the story takes a turn because at the exact same time that this is happening, we're seeing something completely different unfold inside Japan. And this is where XRP comes into the conversation. There was a story recently about a major Japanese financial institution, SBI Holdings, issuing a block-based bond. Not just any bond, but one where the returns are paid out in XRP. Now think about that for a second. This isn't retail traders buying XRP hoping it goes up. This is a traditional financial product being directly connected to blockchain infrastructure. And SBI isn't just any company, they're one of the most powerful financial groups in Japan and have had a long-standing relationship with Ripple, working closely on blockchain-based financial solutions for years. So what this actually represents is something much bigger than a headline or a price prediction. It means XRP isn't just being traded, it's being used. It's being embedded into financial systems, into products, and into infrastructure. At the same time, we're seeing Ripple double down on Japan, hosting major events, bringing together institutions, developers, and financial leaders all in one place. And when you zoom out, this starts to look very different because on one side, you've got the traditional system tightening with rising yields, less liquidity, and more pressure. While in the other side, you've got a new system being built slowly and quietly, piece by piece. This is where I want you to start thinking differently because the headlines you're going to see are things like XRP to $150 or price shock incoming, but those headlines are missing the point. This isn't about price predictions, it's about positioning. It's about understanding where the system is moving. And actually, before we go deeper into this, I just want to pause for a second because I know a lot of you are feeling this right now. The The markets are uncertain, there's lots of noise, there's constant news, and it can feel overwhelming just trying to keep up with everything that's going on. So, if you do feel like you need to step away from the charts for a bit and just reset your head, there's actually something quite fun happening that I think a lot of you will enjoy. Freedex, who are a crypto exchange, are hosting a live quiz show with Milkshake Matty on the 8th of April. And it's going to be streamed live on Twitch. And this isn't just any quiz, it's interactive, it's fast paced, and it's all based around crypto knowledge. So, whether you've been in the space for a while or you're still learning, it's a really good way to test what you know without the pressure of trading or making decisions in the market. And they're giving away up to $15,000 in prizes as well, which definitely makes it more interesting. So if you fancy something a little bit different, just go to Twitch and search for Freedex Exchange. I will leave my link here for you to sign up and register so you can take part if you want to. Now, coming back to the bigger picture, because this is where everything starts to connect. If Japan continues raising rates and bond yields continue rising, that tightens global liquidity, which historically is not great for risk assets in the short term. But at the same time, that pressure creates something else. It creates instability, it creates cracks, and it forces systems to adapt. And that's where blockchain starts to become more relevant. Because when traditional systems become inefficient, slow, or expensive, new systems don't replace them overnight, but they start to integrate. And that's exactly what we're seeing. Not just in Japan, but globally. We're seeing the tokenisation of real world assets like bonds, funds, and treasuries being moved onto blockchain rails. We're seeing stablecoins becoming more important, especially in regions with currency instability. And we're seeing central banks exploring digital currencies, including Japan. So this isn't just about XRP, it's about a shift in how the financial systems operate. Japan is in a really unique position here because they've already gone through decades of low growth, low inflation, and extreme monetary policy. In many ways, they're ahead of everyone else. They've already experienced what the rest of the world is now moving into. So, what happens in Japan often becomes a preview of what happens next globally. And this is why this story matters, because if Japan tightens too quickly, it could trigger volatility across markets. But if Japan successfully transitions into a more normal rate environment while also integrating blockchain infrastructure, then it becomes something else entirely. It becomes a blueprint. And that's the part that most people are missing. They're looking at short term price instead of long term structure. And if you can shift your perspective slightly, you start to see things differently. You stop asking if XRP is going to $150 and you start asking where XRP fits if financial systems evolve. Who is building with it? Who is integrating it? And where is it actually being used? Because that's where the real value comes from. And this doesn't mean that everything goes up overnight. It doesn't mean crypto explodes tomorrow. In fact, if liquidity tightens, we could see more volatility, more downside, and more uncertainty. But within that, you start to see separation between projects that have real use and projects that don't. And that's something we've already started to see. The market isn't moving as one anymore, it's becoming more selective, and that's what happens when markets mature. So when you look at Japan, you're not just looking at one country, you're looking at global liquidity, interest rate cycles, financial infrastructure, and the future of how money moves all in one place. And this is why I wanted to bring this to you, because this is one of those stories that most people will scroll past. But the ones who take time to understand it are the ones who start seeing the market differently. And if you want to take that even further and understand how we navigate markets like this in the Crypto Wolf Pack, how we read the macro shifts, and how we position ourselves in both bull markets and bear markets, the link to join the community is in the description of this video. And also, if you want to know the exact strategies we use to make money in both types of markets, we've made a completely free course for you. It's called the Crypto Liftoff course, and again, the link is in the description below. And honestly, this is why I always say you don't need to know everything. You just need to understand how things connect, because when you understand the connections, you're not reacting anymore. You're anticipating, and that changes everything. If you enjoyed this video, make sure to like and subscribe to the channel and let me know in the comments. Had you heard about the Japanese bond market before this? And do you think stories like this actually matter for crypto, or is it all just noise? Thank you so much for watching, and I'll see you in the next one.